Closing bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, another lackluster session, so to say, when it comes to the headline indices. But we have made a record of sorts, and not a very happy one at that.
Yes.
5 straight series of negative returns for the Nifty, and of course, tomorrow we close the month as well on a negative note. Most probably, I don't want to make some definitive statements here, but yes, it will be 5 straight month of losses. The 5-month losing streak would be the first in almost 28 to 29 years. So yes, that's not a very good feat. And today, of course, the index was fairly range bound, just like what happened on Tuesday, right?
Correct.
No big moves, but the big moves are limited to the mid and small cap indices, and that too on the downside, another 1.5% kind of cut coming in on the mid and small cap indices. So yes, the breadth is extremely poor. 1:4, that was the NSE advanced decline ratio, and it doesn't seem to get better. And we are witnessing fair bit of weakness when it comes to some of the stocks as well from the broader end of the markets. But looking at the sectoral movers, IT, that index was down for a 6th straight session. Yatin, moved grim there as well. Although NVIDIA reported good set of numbers, not blowout, but not bad either. Guidance has also been strong, but the stock itself ended in the negative. I think the street was expecting far better numbers, great expectations.
Thankfully,
as you say.
there was no negative surprise, else we would have seen the US markets also get into mayhem. But thankfully that didn't happen.
That didn't happen. But so they had great expectations, didn't really live up to that, so to say. But the Nifty IT pack back home, 6th straight week session of losses rather. Realty, autos, other big laggards today, but what held out was the Nifty Bank Index, Yatin. Good moves from some of the private sector names. Even SBI was in the green today, Yatin. Aside of that, metals, shining bright once again. In terms of individual movers, you had all of these NBFCs doing well on the back of RBI relief, which of course you will be talking about later. Shriram Finance, Bajaj, Twins, these were among the top gainers on the Nifty. Sun Pharma, Hindalco were also gaining, but Wipro, Yatin, even though IT pack was under pressure, Wipro managed to end the day in the green. On the flip side, Ultratech Cement, for obvious reasons, capital allocation concerns on their foray in the cables and wire segment. We'll talk about that in just a bit. But Trent, another big loser today, Yatin, another 3% cut on Trent. This stock, we do see some bit of buying, intermittent buying, but it kind of gives way to selling once again. That's what happened today as well. Bajaj Auto, Tata Motors, M&M, all three big laggards on the index. Bharat Electronics, BPCL were some of the other notable names that were among the Nifty losers. But Yatin, they clearly belong to NBFCs, and that too on a day when broader markets saw some bit of crack.
Absolutely, and we'll talk about the entire NBFC pack in detail. And if you look at the markets today, the advanced decline ratio was also weak. 1:5 is where the advanced decline ratio stood. So clearly the mid-cap end of the market underperforming. We had the mid and small cap index both down more than 1.5%. However, the benchmark indices tried to hold their entire forte, given the fact that today was the expiry day. Nifty held that 22,500 mark on the lower side, and the Sensex also defending that 72,500 mark. Overall, if you look at the top gainers of the Nifty 500, it was stocks like Just Dial, AU, Small Finance Bank, Chola Finance. So a lot of NBFCs clearly dominating the Nifty 500 gains. However, the entire cable stocks, be it RR Kabel, Polycab, GNFC, KEI Industries, these were the top laggards on the Nifty 500, and most of them obviously from the wire and cable business. In trade today, Chambal Fertilizer and Bajaj Finance hit fresh 52-week highs. However, stocks like GNFC, JBM Auto, Havells hit fresh 52-week lows, and Nandita, clearly, the Birla Group making the headlines after the entry in paints segment. Now it's turn of the wire and
cables and wires, and yes, and it has actually shaken up the entire cables and wires segment today itself with the announcement. Of course, they will take 2 years to commission that plant in Gujarat, but the anticipation of the kind of competition that these companies would be staring at, that has left the street scurrying, so to say. Major sell-off across the board, right? Polycab 18% down, KEI Industries over 20% down. So, but let's first talk about Ultratech. That stock was also down 6%. Of course, there may be concerns about how they plan to retire debt, because especially even on the cement, on their core business level, they have been consolidating, acquiring companies. So yes, There are concerns about how they will look at allocating this capital, how they will look at retiring their debt as well. But this entry, as per Street, is a surprise entry. And of course, first of all, they will be spending somewhere around 1,800 crore rupees on the Bharuch plant over the next 2 years. Commissioned, it will be commissioned by somewhere around December 2026. The move per se is in line with the company's strategy to become a comprehensive building solutions provider, which is why they entered into the paint segment as well with Birla Opus. Look what it did. I mean, the likes of Asian Paints have seen a major, reaction. And how they have also scaled up Birla Opus is also commendable in only 1 year.
Yes.
So now, of course, if you look at, the growing demand for cables and wires across residential, commercial, industrial and infrastructure spaces, that's where Ultratech is wanting to, spread its wings and become a comprehensive building solutions player. In fact, talking about the wires and cables segment, it has seen a 13% revenue CAGR, compounded annual growth rate, from FY19 to FY24. And with the ongoing shift from unorganized to organized, the sector actually presents significant opportunities for a player like Ultratech to come in and gain market share. Now, Ultratech itself believes that it will be value accretive for its shareholders. It has, of course, a strong distribution network, with outlets of over 4,000 or 4,400 or so, and it can leverage that. And of course, it has Hindalco as its group company, so raw materials can come in there as well. So all in all, it looks like it's going to be good, but the stock is dropping because there are concerns regarding capital allocation, how they plan to strategize that. Also, the debt reduction plan, as I mentioned, because they are consolidating when it comes to the cement space as well. Also, there are apprehensions that this diversification is in a non-core business, and how the management will navigate this new business is something that is concerning the Street, which is why the stock saw a 6% kind of a cut. But let's talk about what the brokerages are saying very briefly. Morgan Stanley has retained its overweight call. They've set a target price of 13,650, and they've said that this development is, it's a positive development strategically. And of course, cable and wire, as we all know, it's a high growth and high margin business. And of course, they've also pointed out that they will be using their existing in-house distribution network and end consumer connect as well. These are some of the things that they will capitalize on. Jefferies as well, by target price is at 13,265. But they've said that there are no specific inputs or available on product profile and target segments as well. And of course, they've also mentioned that any knee-jerk reaction on the stock will actually be a buying opportunity, which is what has happened, right? I mean, we have seen a knee-jerk reaction. So according to Jefferies, it's a buying opportunity. But given the fact that the company has a strong balance sheet and profitability-wise, it has been doing well. There are no major concerns when it comes to the foray into cables and wires.
Yes, and I think they have the group company Hindalco also, which will supply the raw material, which is copper primarily in the cables and wire business. So I think they have a cost advantage, but the market is really wondering why the entire cables and wire business was not probably placed under Hindalco and why it was placed with Ultratech. Ultratech probably at the group level makes sense because they are into building materials. They did not choose Grasim because probably the paints business is where the management is already focusing on. Probably the Ultratech management would like to build this business because this is a very high turnover, high growth business, so to say, especially with the real estate pickup that we have seen in the past 2-3 years. Valuation wise, Nandita, a lot of these cable and wire companies, be it Polycab, be it Havells, be it KEI, all of them trade in P multiples of 40-50 times on trailing basis. Correction was probably warranted because with competition heating up, we have seen the similar scenario in paints business, and whatever been told by Asian Paints, they have lost market share. Birla Opus has done well, as you were mentioning earlier. And today, the cumulative market capitalization of the top 5-6 cable companies in India, was down by 30,000 crores. So that is the kind of decline in market cap that we have seen. Ultratech also lost 15,000 crores market capitalization. So 45-50,000 crores of market cap wiped from various companies on the back of this announcement. From
Imagine, it's just the announcement stage right now. But it's not just cables and wires. Look at different sectors. Paints, we were talking about it. Even autos. With the Tesla's entry, we've seen autos also feel the heat. So, a lot of, new players entering markets, and, kind of shaking up confidence of different sectors. But talking about the cable and wire stocks as well, as you mentioned, sizable correction. You know, before today, stocks like Polycab, Finolex had seen correction of somewhere around 25 to 45%. But after today's move, I think Polycab, I won't be surprised if it has wiped out all of its 2024 gains.
Correct.
So I think first negative year of negative returns since its listing, if I may say so, for Polycab. Now, obviously, it's the competition fears that is gripping the market, because everybody saw what happened with Birla's disrupting the paint segment. They have wrenched some market share from Asian paints, and you know how the cable and wire sector is different from paints is that for paints you have oligopoly, right? You have a few large players who have control over the market, but with cable and wire, the segment is very, very fragmented. No one player is dominating across the segment, across the different businesses, right? When you talk about end users, so that does give rise to fear that market shift could happen, market share shift could happen at a much rapid pace, which is why I think some of these stocks have taken it on their chin. Just want to run through what brokerages suggest at this current juncture. Jefferies is saying that the Ultratech Cement's FY29 revenue potential would be 5 to 7% of the industry, but they are expecting a lower impact on Polycab vis-a-vis other B2C players like Finolex or Havells, given the fact that Polycab has higher exposure to business to business and infrastructure segments, while the other two companies have more, rely more on direct consumer demand. Polycab is Jefferies' top pick still. Morgan Stanley is fairly surprised, but it's not overly concerned about Ultratech's entry, and it's saying that it won't really impact much when it comes to their cable and wire coverage. HSBC, on the other hand, sees material impact on growth as well as margins post FY27. Because this the business will only get commissioned in December 2026. So they have cut target. HSBC has cut target on 3 stocks. Havells by 6.5% to 1730 vis-a-vis 1850, on Polycab to 6250 vis-a-vis 7840. So it's a 20% target cut, and for KEI as well, it's an over 20% target cut. Other experts say that they've said the same thing that we were talking about, that the impact will be much bigger than what happened or what transpired in the paint sector. Market shifts could be very rapid in comparison to paint sector, but RR Kabel management was on CNBC TV 18 today, and they've said that the concerns are overstated because it will take 4 to 5 years for Ultratech to begin operations and scale up at a very large scale, and the company has said that they will try to be ahead of the industry as well. Also, another point to note is that domestic mutual funds have been increasing their stake in some of these cables and wire segments over the last 12 months. So now, what do they do? Are they going to sell or are they going to sit tight? That's something that we'll watch out for. But for now, this news has come as a major negative, and we've seen how the stocks have really reacted.
Absolutely.
Polycab was once the mid-cap poster boy, and now it's down somewhere around 35 to 40% after today's move from highs, Yatin.
Yes, so bad news continues, where there is competition, but some good news from the RBI stable. We have RBI, which has reduced the risk weight on the microfinance loans from 125%, which was changed to now 100%. Now, what essentially it does is that when the risk weight reduces, as announced by RBI, which will be effective 1st of April 2025, it will lead to lower provisioning as well as better liquidity with the banks to lend further to NBFCs, especially who have exposure to the MFI segment. Also, their capital ratios will improve, especially, banks like Bandhan Bank, AU Small Finance Bank, IndusInd Bank, which have a higher exposure to MFI loans. The risk weightage reduction means that a lot of capital would get freed up. And not only that, their lending ability, to the MFI sector would improve. Talking about NBFCs, this step is a positive because late 2023, RBI had announced, the risk weight increase by 25%, and reversal would mean that RBI is now comfortable, with the asset quality trends that have been seen in the MFI industry, which has been worsening for the last 2 quarters. So probably from here on, with risk weightage going down, Nomura believes that companies like Bandhan Bank, AU Bank, and IndusInd Bank could benefit. Also, if you talk about stocks, like L&T Finance, Bajaj Finance, SBI Cards, most of the NBFCs, because of the sentiment change, have seen a good rally in trade today. In fact, it was only the bank sector as well as the financial sector which have saved the day today, because in general the outperformance of the banking sector has led to the market being stable at the current levels and a good expiry, so to say, with the financial institutions outperforming the benchmark indices.
That's true. In fact, I think during the RBI policy as well, I was asking guests whether RBI will look at such a move or not, given the fact that there's such a severe liquidity crunch in the system.
Yes.
Although it didn't happen then, but RBI has been in hyperactive mode to control, in fact, to boost liquidity in the system, and this comes as a good move. And of course, we did see some bit of pressure, earnings pressure for some of these companies like IndusInd Bank, right?
Bank, yes.
MFI stress being the major concern. But now I think that being addressed, third quarter or subsequent quarters would be better for these companies as well. But yes, in a weak market, in the sense that when we saw Midcaps selling off, some of these NBFCs did provide good support on the upside. But I think with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening, and come back and join us again tomorrow morning at 9 a.m. Thank you.